Welcome to Bitcoin Escape Plan, the poor man's Benjamin Cowan. We have some really important levels coming up this week for Bitcoin that we're going to go over in today's video, starting, of course, with the 4-hour timeline, just so we have a clear picture of what it's going to do in the near future before jumping into the higher timeframes. We have a very important weekly and monthly close at the moment that we're going to be taking a look at today to see what that is going to do for the pressure of the price. Before we do that, if you're new here, you can go over to bitcoinescapeplan.com. Every Monday, I release a newsletter where I go in depth into the key levels that we need to see on the chart for momentum and a couple other interesting articles on there as well. Go check it out, bitcoinescapeplan.com. Back to the chart, 4-hour time frame for Bitcoin. What are we looking at the moment? So on Friday and into Saturday morning, we had an impulse from the bottom of the Bollinger Band higher that rose us above the 4-hour SMA in Saturday before failing around this Fibonacci pivot right here at 67.6K, or 67.7 rather. So we failed that pivot. We are now back at the 4-hour SMA again, currently in an uptrend on that, although a slight one. And locally speaking, we have to pay attention to this guy, 65.7K, which is the middle band of the anchored VWAP on the 4-hour time frame. We talk about this all the time on this channel. I do not move this indicator, or tool rather. It's been placed from 2011 to now, so it gives us a lot of interesting data. Like you can see even here, we have candle closes directly above, right above, then below. So the general shape of trajectory right now is technically, that's bullish again, but I would hesitate to call that bullish. Same thing as this guy. I would hesitate to call that bullish. That's closer to consolidation than bullishness. And that's really what we're waiting to see now, is technically that's going to be regarded as a failure of this downward trend line here. And we did just fail that downward trend line on Wednesday as well, which is going to put more downside pressure. As you can see, we're sitting right on this trend line at the moment as well, but it does look like we are probably going to break down back towards that 66K pivot. So in the short term, we're going to probably see it continue to trend sideways. But the more times that it hits this the middle band of the anchored VWAP, the more likely it's going to continue to break down lower towards the lower band. The lower band is currently sitting at 35.9K, call it 36K. Now, we're not going to shoot right there immediately, but that is, in general, what we expect is going to happen once we lose this middle band. The middle band is either going to hold, and we're going to go back towards the upper band, which is currently at about 95.5K, which I've talked about many times on this channel. I don't think we're going to see that again for the rest of the year. So sad, so sorry, but that's just reality. So that's pretty much the 4-hour. We printed that candle here. We just started a new 4-hour candle. There we go. So we're going to want to see if we can get strength above that 67K, 66.9. It's a previous daily close, so that's why that one is important. Let's see if there's any other important daily closes. Yeah, looks pretty ugly. So on the daily, as you can see, we've lost the SMA once again after rising pretty high above it with this failure of the 70.2K pivot that we had been talking about way back then on Wednesday. And then you can see we pretty much have fallen below this trend line. We've stayed below this trend line. We did break this one as well before, at the moment, we have recovered it. But it's still, this is overwhelmingly bearish. That's just reality. Like, it looks like it's descending, not ascending. And again, this is, I would hardly call this support instead of consolidation. This is good, that these closing candles for the day for Saturday are so much higher than where the wick was. Technically, that is good, but again, an accurately drawn trend line from here would go here, which is we're getting to the point where it's almost a horizontal line. So that means that it's probably going to continue to break down lower. We have had volume step in pretty decently in this region here. But as you can see from the volume profile, we're very thin above that, like remarkably thin from whatever that is, from 86K to about 69K. There's just no one stepped in and bought there in a meaningful way, which just means if we were to rise there, all of these people would be trying to sell. So I think the reality is a lot of people who bought any time last year are going to have to acknowledge that they're going to be out of profits for an extended period of time. And let's take a look at what that looks like on the monthly. So the monthly for February just closed. This is very important. And we are now in, oh my God, I can't believe that, March. I can't believe it took me that long to remember what month it is. So now we're in March. As you can see, that candle, nothing has happened so far because we just started. So obviously this one wicks considerably lower than March has thus far. But that's what we're going to be looking for is, that close at about 67K, it looks like, 66.98. So yeah, 67 is only 3,000 higher than the 64K pivot. Not really. I mean, it's better than if we close right on it, but it's still going to put, at the very least, is going to put pressure on the price to retest 64K, which again, we just did. We just did that literally here, Saturday, yesterday. So like it's going to put more pressure, I think, towards that moving forward on this month. And obviously we have the whole month for this to run. So this is important here as well. This is the bottom of the Bollinger Band, which continues to rise. Currently at 55.1-ish. And that is very possible that we see a break of the Bollinger Band on the bottom there. Let me clean this guy up a little bit. Because if we look at 2022, that's almost exactly what happened. Didn't happen until June. But again, as we talked about on this channel, this May candle is kind of where we are now. Or really now, we're actually at closer to the June candle. This was the May candle. This is the June candle. Again, this is January and February. So we are left translated. We are pulled over to the side. More violent downside to come, most likely. But that's what I would expect now is over the course of March, we're either going to get a relief rally back towards the 76.2K pivot, I would imagine failing at about 80K, or more likely, because we are below the 50% mark of these two Fibonacci pivots inside this range, that's going to put us probably, I would imagine, in an initial uptrend where we reattempt that 70.2K pivot and probably fail it one more time before breaking down below 64K and then going lower. And I would imagine it does stop somewhere in here before. I don't know why I'm so sorry. This is so tired, sorry. I do expect we are going to break below that 55.1K on the monthly Bollinger Band, as well as that 53.4K Fibonacci pivot before touching 44. I don't think we're going to shoot right to 44 immediately. It's possible, but I don't think so. And there is a lot of volatility going on in the world right now. They just killed Ayatollah Khomeini. There seems to be like a ton of just general uncertainty, which usually is better for gold than things like Bitcoin or stocks or real estate. People feel more sturdy with a quote unquote harder asset. And I think what people have to realize about this is it's still very early in Bitcoin's cycle. It doesn't feel like it for us because many of us have been here for years. Like I've been learning about Bitcoin since 2017. So at this point, for most of us, it feels like everyone in the world already knows about it. Everyone in the world already understands, why this asset is the definition of freedom. But a lot of people do not, and by the numbers, you still got to remember that this is a 1.5, $2 trillion asset class, still very small in terms of the broader sphere of markets. So there's no reason for us to assume that we're magically going to go up and to the right. I see a lot of channels still saying that. I don't know why they do that. I would much rather just tell you the truth, even though, again, I'm like not a crazy big channel, the poor man's Benjamin Cowan. But what we're looking at right now is we need the ETF buyers to step up, essentially. These are right around the levels. The closing candles for those guys are 59.2K to about 71.2K. So in that range, which that is where we got support at 59.9K, which again is right around those levels, slightly below the lowest closing candles on the monthly time frame. That is potentially going to form a little bit of support, but I would imagine it's more likely that we consolidate before the final push lower, which for me is still 34 to 39K is the lowest that I can believe for this cycle. I don't think it'll stop at 44. It'll likely probably break lower than that. And that's primarily based on what is the 50% retracement mark from the previous all-time high. And that would be like 30,500. So I think it'll be higher than that. I think that the 50% retracement mark of those two previous all-time highs in 2021 are going to form as support. So these buyers here, essentially, are not going to want the price to go lower. They will step in massively, I would assume. And again, that would mean the context is all of these ETF buyers are underwater because this is the first candle people could actually buy it. Maybe technically December, but still, you're still looking at whatever 37.7K at the bottom of that candle. So realistically speaking, these people are all going to be out of profit for a short period of time. Not a long period of time. Like I would imagine that this all happens by October. That is still the baseline assumption of the channel, is that we continue to drop into October and then we begin our recovery in the opposite direction not long after that. So moving on to the weekly. So the weekly time frame obviously has a different close than the monthly time frame right now. The monthly just closed. It is going to put bearish pressure on it. As you can see, we've been pretty thin the last 3 weeks. A lot of selling pressure, but pretty thin in terms of the candles and haven't really gone that far. We pretty much held on to remaining above that 64K pivot, or barely remaining above it. As you can see, we wicked it initially on the way down. We stayed above it the last 2 weeks, and then we have wicked below again, but closed above. But I would still say, if we're going to close anywhere where we are right now, or God forbid lower, it's going to put bearish pressure on the price going into the week. That's going to force us to retest 64 and see if we can go lower, which is just going to mean we're going to retest that 59.9, which technically at the moment we have retested. Where is this guy? This is at 62.5. That's the lowest that this one has gone in the past week. But I don't think that we have. I don't think we've seen enough strength, and certainly not in the form of volume, for us to assume that we're going to break back in the opposite direction. So we really need to start building support somewhere. And this would be where we would build it. Again, is somewhere between about 59K and 64K is where we would need to see support start to form if we are going to see an uptrend. But the overwhelming view on this channel, and I'll go over this tomorrow as well, is this weekly SMA is going to continue to get pulled lower and lower and lower until by the time we actually interact with it, it's probably going to be below the 80K pivot, or maybe right at the 80K pivot, which is going to force the 80K pivot to act as resistance instead of support. The same way where 96K, which was our original hope, was that we would bounce back there one more time. It just does not look like that. Like that would be really difficult. That would be over the course of a couple weeks, and I don't know when that would happen, quite frankly, if we continue down lower. It's just not reasonable to assume that. So that is no longer the baseline assumption of this channel. The baseline assumption is that we cannot get higher than about the 80K pivot. And that would sort of function as this second lower high attempt, but it just does not look like we're going to have any momentum that will either stop the SMA, flatten it and curve it, or God forbid, give it an uptrend again. Just no reason to assume that at all. So we have to assume that this right here, that 97.9K wick in early January, that is the high of 2026. The price will not be higher than that again for the rest of the year. That's my opinion, not financial advice, but that is what I believe. So what does that mean going forward? What that means going forward is, again, the most I could expect is if we start to show and form support here, we could get a bounce into late March or say middle or end of April into that 80K pivot before another failure. Like, I don't expect it to hit 80K and then go higher. I would expect it to hit there, maybe go slightly above the weekly SMA at that time. Like, say the weekly SMA touches like here, 83 to 80. I would just imagine we're going to continue to break down after that. That's just what the charts say at the moment. So what we're looking for in the short term is if we can get support between 59K and 64K. Those are the ETF buyers. That's where the majority of the volume is in short-term holders. Although technically a lot of those people are long-term holders now because it's been more than a year. And we're pretty much just waiting for the crypto market structure bill and the stablecoin acts to be finalized, which, as far as I'm aware, is going to take into the summer and the rest of the year. The stablecoin bills, I believe, don't go into effect until next year, which means all of the liquidity that is going to flood into the market does not arrive until next year. So we kind of just have to expect Bitcoin to continue to get bullied. SPY is starting to show some weakness. Gold is really not showing weakness. It is still my opinion that gold is going to run likely for many years. But SPY is starting to slow down a bit, which is not necessarily good or bad news for Bitcoin. Bitcoin is on its own journey now. And I really think that those are the levels you got to pay attention to. Is in between about, well, this is lower on the weekly. So 54.6K to 71K. That range is really where I would imagine we spend a decent amount of time, just because all those people don't want to give it up. But if we rip right through that, then our next consolidation level is that 44K pivot. And we have way less people that bought at that mark. I mean, in here. But you're talking about people who bought at the 50% retracement mark. So basically, it would be the people who bought at this point in 2022 is where we're about to be knocking on the door very, very soon. So anyone who bought early in 2022 is probably aware of what's going on now and is probably waiting until we come here, because as you can see again, we're starting to see people step in at these levels a little bit. And then we have a lot of support down here in the under 30K club. That's where most of my cost basis is. Thankfully, I would like to top it up back down there if possible. We'll see. But very thin right below us, right below about 62.8K. It is remarkably thin. So there's just nothing holding up the price there, which means it's probably going to punch below it if the market is bearish enough. So that's what we're looking at in the short term. Pay close attention to the weekly close today at about 4 p.m. PST, Los Angeles time, or whatever that means for you. But I would imagine that's going to be close to the 64K pivot, closer than this midpoint here. This would be 70.3K, I would say, is about if the price can climb to there between now and the end of Sunday. That would potentially be a bullish signal, but I think it's more likely that this guy's going to close on the bottom side of this range, therefore putting more pressure towards 64K, which again, for anyone who is not familiar, 63 to 64K is the 50% retracement mark from the 126 all-time high in October. Pretty normal. We do this almost every bear market. It's about a 50 to 70% retracement. That is early in the bear market. This one is here before reclaiming and then continuing to break down on the weekly. We may have already seen our attempt at the weekly and a breakdown lower, and that's what we're talking about for the next potential attempt. Would probably be closer to 80K than 96K. So that's what I've been paying attention to at the moment for Bitcoin. I will give an update tomorrow in the newsletter on what we see with these weekly pivots and what that's going to mean for momentum moving forward. Overwhelmingly bearish, possibility of consolidation. It is what it is, folks. Just get your piggy banks ready so that you can continue stacking. That's all you really have to worry about. It might seem like a bad time or a stressful time if you're super new to crypto, but this is very normal. And this is actually how you end up accumulating more Bitcoin, is just by being calm when everyone else is freaking out. All right, I'll talk to you tomorrow. Thanks, everybody.